Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Paul Dellaquila, President of Defiance ETFs, to discuss the launch of the Junior Biotech ETF, ticker IBBJ, which tracks the Nasdaq Junior Biotech Index. Paul, it's great to have you with us. Welcome to Trade Talks.
Always a pleasure, Jill. Thanks for having me back.
And Paul, tell us about the Nasdaq Junior Biotech Index and how it's different than the more well-known Nasdaq Biotech Index.
Sure. The thought behind IBBJ, the Defiance Nasdaq Junior Biotechnology ETF, recently launched just over 3 weeks ago, was to essentially provide investors with more target exposure than the traditional IBB. So instead of giving you market caps across all the big ones that everyone knows, Gilead, Amgen, Biogen, et cetera, this is going to target any of the companies that are sub $5 billion in market cap and a minimum of 200 million. So you're really getting that, what we tag junior series, which is more mid and small cap exposure.
And why invest in the Defiance Junior Biotech ETF?
Because our belief is that space offers up a lot of opportunity for investors. So if you look at something like the broader NASDAQ biotech, the traditional one that people know, roughly 60% of the weighting is going to come from 12 or 13 names that make up that index. What we're providing are earlier stage biotech companies, companies that are earlier in their phases as far as drug trials, vaccine trials, so a lot of stage 1, 2, and 3. Some of those companies already have solutions or treatments out in the marketplace. However, most do not. So you have a couple of things going on there. One, provides a lot of potential upside for investors. Two, does provide target acquisitions. So some of the more bigger and broader biotech companies can acquire some of these companies, but also the traditional ETF benefit, diversification. There are clearly going to be winners and losers when you target a mid-cap and small-cap biotech space. So what we're providing is a very broad, diverse exposure point where you're going to have diversity across many different names instead of targeting just one or two in your portfolio.
So then is this ETF actively managed?
It still tracks a benchmark. We've actually partnered with NASDAQ on the actual index construction.
And let's take a look at biotech, the outlook in light of COVID-19 and an election. It's almost a double whammy for the sector this year.
Yeah, for sure. And a little bit of that is timing, right? You can never plan for a global pandemic, and this sort of backed into that. And I think if you take a step back too, biotech has been a space or a subsector in the ETF world that investors have shown a ton of interest in, right? There's roughly $20 billion or so tied up to biotechnology ETFs. We're one of the first ETFs to actually give you beta exposure, that mid and small cap space. And particularly right now, where the world, a little bit of diverse opinions, right? It's hard to get consensus on anything right now. I think there is consensus on the fact that people want to live longer, they want to stay healthier, and these companies are working on vaccines, treatments to help make that happen.
All right, Paul, great to catch up with you as always. Thanks so much for joining us on Trade Talks.
Thank you so much, Jill. It's been a pleasure.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.